Okay, very briefly, the role of the regulator and central banks. Uh, it is thought to be the lender of last resort if all happens, but in practice it may not exist as such. But certainly, commercial banks, retail banks are thought to be safer because of they hold accounts for a very large section of the population of a country, of a province, or whatever. So to safeguard their interest, it may be not politically the right thing to let the bank fail. So it is in that sense the regulator or central banks play the lender of last resort. Uh, they may also have ways and means in which they can launch a rescue operation. The bank X is in trouble, and the basically the regulator or central bank may ask another bank to take over this. So this is a role. Here, what we are saying is currently is our understanding that the regulators do not play such a helpful role to the Islamic financial institutions than they play with the conventional institution. This is not a uniform rule, but that is what happens. Part of the reason is that the regulators feel that there is a lack of instruments Sharia acceptable through which the central bank or regulator can intervene to help the bank concerned. They cannot give money. This is not Sharia acceptable, giving money. It has to be under some economic activity. And of course, the banks are all licensed by the regulator as such, Islamic and conventional. So it is their duty to help and restore confidence in the bank, to have some Sharia instruments through which they can purchase the securities held by the Islamic institution. And many times it's not the issue of the asset. The issue is of the liquidity, that the financial institution which is in difficulty may not have liquidity, sufficient liquidity, and hence the role of Treasury is exceedingly important to make sure the bank has adequate lines and adequate funding available at all times. So in case there is a market stress or market participants do not want to give money, then there are alternatives available. We at IDB are working with some regulators to suggest that this is the duty of the central bank or the regulator to monitor and look after the interest of all the banks, and ways and means should be found, and some have been found in the case of Malaysia, for example, that they can easily intervene and help and safeguard the interest of the Islamic financial institution, its depositors, and the public at large. We go to the next section, which is resource mobilization. This, of course, is central to the Islamic institution. There has to be a close involvement of the Treasury with the operational units of the bank to assess short and medium term business plans and resource needs. As an institution, Islamic financial institution, they will be doing various types of businesses, and those businesses have financial need and financial requirement. Of course, we hear all these discussions so far I have given is the bank working independently for the benefits of the shareholders. We have not mentioned here that the Treasury may manage money on behalf of third parties, which will be the so-called off-balance sheet. It is not the risk of the bank directly, but of course it is liable if it does not fulfill its role appropriately. So here what we are saying is it will have a role to raise money from the market for its own needs. In this, the Treasury Department, one has to take into account the business plans, both short term and medium term. Money may not be needed in the first half of this year, it may be needed in the second half. Market conditions in the second half may not be as good as they are today. So it's the call or the judgment of the treasurer of a bank to say that the market is very liquid or market rates are lower, and hence we should expedite the resource mobilization activity. We should issue paper sooner rather than later. Also, of course, it is a question of cost of funds, that what kind of rate at which the money can become available as such, and this will directly feed into the business of the bank. You can raise money 3 years and 5 years, where you have the requirement, giving a loan to some party or participating in leasing or some other transaction, and you need to see, you don't have the money or the need for the money today, but you may have 3 months, 6 months, or a year's time. So it is a planning issue. You plan and see whether the risks, what are the risks as such going forward, and hence is it better to raise the money today for this project and get it started sooner or later. Also, it is mentioned here in the slide that the pricing at which money can be raised is a direct component of the prices the business unit can charge and have to charge their clients, because there is a link. If you can raise 5-year money at 5% and you have a business model, you are giving money for a longer period or for the same maturity period at much higher level, then you are taking a much bigger risk as well. So there has to be a view of what will be the rate in future. Now, what are the instruments? In the short term, for short-term funds, we have already discussed reverse murabaha. So institution who need for liquidity, it may go up to 1 year, but normally it is up to 3 months. That through a bank, through reverse murabaha, can raise short-term funds. And of course, there is a price risk the longer maturity you go for. Longer term, what can be done? I had already mentioned sukuk. It is the issuance of sukuk. These are asset-backed. Assets could be, as I mentioned, real estate, equities. It could be leasing, which is a rental, and these are some of the assets which can be private equity. These can be put in a pool, and then the rest, the minimum 51% is that majority should be assets and minority can be debt, and the debt in Islamically will be murabahas, istisna, and such instruments. So this can be packaged together, these pool of assets, and they can be securitized. You basically issue certificates against this package. Naturally, you should have acceptable assets. If one doesn't have the assets, sufficient assets which can qualify, then sukuk cannot be issued, which can be traded. There can be sukuk as a certificate, can be, but it's not tradable. Tradability is the issue. Can you buy, can you sell as and when you need? That's the issue. But if it's not Sharia compliant, if it's less than, it's not Sharia compliant, and it cannot be traded in there. Now, the other element could be that just like there was a reverse murabaha done, you can also have a rollover commodity murabaha. Commodity murabaha we dealt with a while back. So a murabaha is the same type of thing. A murabaha deal is done for say 6 months. After 6 months, of course, the money will be paid and the murabaha will expire or finish. Under the rollover commodity murabaha, and it could be say up to 3 years, because commodity murabaha risks people want to take shorter term rather than longer term. Then what you do is you can fix it, that instead of having one murabaha, you will have a series of them. Over a 3-year period, for example, you will have one murabaha for 6 months, On maturity, both parties are obliged to continue the murabaha, and it will be so-called rollover. But of course, both parties can agree to finish the deal and pay each party what is owed. However, the whole idea as a long-term financing needs is a rollover commodity murabaha. It's not after 6 months you say we don't want to renew. You are legally bound to renew as such. But if both parties agree to finish the deal, they can do so, and the price has to be clearly negotiated. So now, this is what the sukuk was. In terms of the liquidity management, I have said they have a role, but somewhat limited role because of the price risk. Of course, when sukuks are issued in larger quantities and of all different maturities, 2 years upwards, say 5 years, then you have a better chance of doing so. But most of the treasury will also have a longer term investment role, and it could be used there. Coming to the last slide now, the area of hedging. This is a somewhat new area for certainly Islamic finance. IDB was one of the first parties who had developed this with the help of the Sharia scholars. But the whole idea is that you may what is called profit rate swap. That as you know, there will be fixed rate deal, a loan. It could be a sukuk. It could be any contract where the two parties agree that they will pay a fixed rate depending on the actual deal, a murabaha deal, which translates into a fixed rate. The area is that if it is a long-term deal at a fixed rate, markets change, and as financial institutions, Islamic financial institutions, banks have a continuing role in raising money from the clients. They need to be more in touch with the market rates rather than fixing the terms in the market for 10 years or 15 years. So this mechanism, what we have said, is such that the fixed rate deal can be so-called swapped or exchanged for a floating rate deal. So if you have an agreement that 3% per annum will be paid over the next 10 years, that can be transferred to a deal which is under a floating rate. The rates change, and it will be against a benchmark rate that you will pay. One party will pay 3%, the other party will pay LIBOR plus or minus certain rate for the entire period. There is a difference between this and what is the way it's done in the conventional marketplace. Here I'm just giving a feeler what can be done today, what was not possible even up to 2 years ago. And even this concept is not very well known among Islamic institutions. IDB has passed on this information to many of the central banks, and wherever we could find some interest, we have provided the documentation. And IDB has done many deals in this area. The other one is a currency swap, which is, as you can see by the name, you have a certain currency, but you have the need for another currency. So the two parties can agree to swap this, and there are again Sharia compatible way of doing so. Like this, IDB had done that, and this can be also taken advantage of to reduce the risk. Risk minimization is useful and very important for the health of a financial institution, and we in the Islamic world we also make sure that is doable. Thank you very much for the time. I hope it was useful. My gratitude to Islamic Research Training Institute who has organized this, and I look forward to be attending and also presenting on a future occasion. Thank you very much.
Thank you, Brother Muhammad Tariq, for a very informative and lecture full of practical insights.